Hi, I'm Michael Chang. I have 6 cabins in the Smokies, and we operate a portfolio of 26 short-term rentals in Pennsylvania and in Tennessee. So I use AirDNA to help inform my pricing decisions and just look at market health overall as we acquire new properties. So I'm going to take a look at occupancy rate. I'm going to take a look at the supply-demand dynamics in the Smokies. And I'm going to take a look at how rates are doing and also looking at January and February, just how bookings are trending. So I hope this is helpful. So first, let's look at the kind of this overall occupancy rate. October closed at 79%. October last year closed at 78%. This November closed at 69%. November closed this year at 68%. So there's definitely been an increase in listings on Airbnb and VRBO, just given the new supply in the market. So you can see that demand continues to react to that. So the new supply is being absorbed into the market, which is definitely a good thing. So you're seeing kind of the market stabilizing, which is or stabilize, which is a good thing. Okay, so let's take a look at the supply-demand dynamics of the market. So if I look at November here, there were 150,000 nights booked, about 8,000 properties booked overall. So the booked properties just represents the inventory that's on Airbnb and VRBO. That's how the data is collected. It's not the entire sample of the entire market, but it's at least 50%, which makes it a representative sample. So this is definitely worthwhile to know and to understand. Okay. So again, 150,000 nights booked, 8,000 properties. And I look at the year before, 117,000 or 116,000 nights booked on 6,000 properties. So if I look at that, so if I use this as if I use listing nights booked as a proxy for demand, 150,000 nights over 116,000 nights, that's a growth of 29%. And if I looked at the supply dynamics, which is just the book properties, that's 8,000 properties versus 6,077 properties here, right? Go back here again, 6,077 properties. That's a growth of 31%. So 2% difference. So again, that reinforces what I'm seeing above in the overall market occupancy, that this decent, it's good supply demand, right? They're fairly balanced since you're just kind of 2% from each other. So that's again a good sign. So the next thing I look at is rates, right? So you can have an increase in supply, but if you have to drop your rates down a ton, that's not good, right? That means that people are having to drop rates a lot in order to absorb supply. And if I look at rates overall here, just kind of, this breaks down. AirDNA will break it down by price tier, but let's just look at kind of the overall market. We're seeing that $385 is the ADR for November, and then if I look at November of last year, it's $386, right? So again, that's basically right on top of each other. It's a 0.2% difference. So for all intents and purposes, like the data, all 3 data points are supporting that the market's stable, occupancy stable, ADR is stable. So definitely a good sign, which is why we're continuing to kind of look to reinvest in the market by getting more units. So from a pricing perspective here, I look at, you want to take a look at how future demand is looking. So we'll look at future demand analysis and rate analysis. So here you'll see that this next weekend is going to close at 49%, 42%, and then the weekend after that is MLK is going to be higher, right? So it's kind of 47, 50%, and then it definitely trends downwards at the last 2 weekends of January. So at 30%, 32%, 25%. So if I look at just January, this is for all intents and purposes done. So kind of top end of the market's about 50%. We're at 25% here. So you would think that, the last 2 weekends of January are going to be slower. Kids are back in school. So I'll probably top out at 35, 40%. So there's probably another 10% there, 10, 50%. So if you're not booked, there's only that much more demand in the market. So you definitely want your prices and your LOS restrictions to reflect that. And then if I look at February, it's definitely one of the low. It's definitely probably the lowest month in the market, and you're seeing kind of the first weekend here. The first weekend here at 20%, second weekend here at 20%, third weekend at 20%, 25%. Excuse me. Just Valentine's Day, it's expected a little higher. So, I mean, there's probably like, again, 30-35% in the overall market. There's probably still 10% left there. So, if you're not booked yet, you definitely want to just be mindful that there isn't a ton of demand left in the market. So just want to be able to reflect your prices appropriately here. And it's kind of backed up by this data here. You'll see that the book nights are, so if I click on what happened last year, take this off right now, you'll see that the market, the ADR is below where it was last year. So there isn't a lot of benefit to waiting. If you're waiting, you have to drop down your rates, and you can see here, right? The book rate is lower than it was last year, right? By 10, about 5-6%. So no really reason to be heroic here. You want to just kind of be mindful that if you wait too long, you really have to slam down your rates in order to get bookings. And you see here, I should go back to February so you can see a little clearer. Again, you see kind of book nights. Previous year was higher than it was on near end dates and higher further out. All it means is that, people that have already been booked got a rate that they liked, which is better than last year. But if you wait, you're going to have to likely drop your rates to below where it was last year. And that's supported by the data here. You're seeing that here, especially on the weekdays. Weekends, maybe there's some more room, but definitely on the weekdays here, it's showing, you're definitely seeing some degradation in ADR, in book rate. So again, something to just be mindful of. So I hope this is helpful, and leave a comment below if you have any questions, and thank you very much for watching.